I just want to focus a little bit on what's going on in the precious metals market. And if you remember, when I did the podcast last Friday, I really was urging people to immediately buy over the weekend to take advantage of the 24/7 capabilities at Schiff Gold and buy some gold and silver, particularly silver. I mean, I've been hammering, pounding the table on silver all year because of how cheap it was. And the markets gapped up quite a bit on Monday. Maybe $40 higher on gold, $1 higher on silver. So if you bought on Friday night, Saturday, Sunday through Schiff Gold, you got a great price, right? Because the market didn't even move until later Sunday night, right? So you had plenty of time. And I'm going to give the same advice this weekend. Buy your gold and silver over the weekend. Don't wait for Monday. We got 2 more days of the quarter. And I think they're going to be big for gold and silver.
Guys, this is serious. Peter Schiff just issued what he's calling his final warning on silver. He's saying the window to buy under $50 could close as soon as next week. And once that happens, we may never see these prices again. Gold is holding near record highs. Silver is leading the rally. And for the first time in decades, even Wall Street is piling into precious metals. If you've been waiting on the sidelines, Schiff says waiting any longer could be a big mistake. Let's break down what's happening right now in gold and silver, and why Schiff believes we're about to see a historic breakout.
I think Wall Street now, and I mentioned this last week, now that you got Morgan Stanley is saying we have a 60-20-20 portfolio. You've got Wall Street for the first time in my career. I've been a stockbroker since 1987. I've been in the investing business. And for the first time, I'm not the only one telling people to buy gold and silver. Wall Street is now saying the same thing. And 20% of a portfolio in gold, that's a big percentage. That's not chump change. That's a lot of money that's going to be coming in to gold. Now, not all at once, but pretty much every day for the next several years. I think it's the beginning of a huge wave of money, Wall Street money, that's going to be coming out of bonds and other fixed income into gold and gold-related equities. Because now, Wall Street is not worried about gold prices crashing, which they always were. Now they realize gold's going up, so these gold stocks are a bargain. And what's great about the gold bull market now is what it was missing before. Silver is now leading the way. That is a bullish sign. People always pointed to the weakness of silver as a lack of confirmation because all big gold bull markets, silver leads. Well, now silver is leading. Gold was up 0.5% today. Silver was up 2%. Silver closed over $46. It traded over $46.50. Silver was up 8% on the week. So if you bought silver last weekend, like I told you to, in this market wrap, you're already up 8%. Gold was up 2.2% on the week. Year to date, silver's up 59%. 59. In fact, when it was at its peak, it was up 60%. Then it pulled back a bit. Gold is up 43% on the year. And the year's not even over. We got 2 more days left in the third quarter. I think the fourth quarter is going to be the strongest yet for gold and silver. And as I just mentioned, these next 2 days, a lot of portfolio managers are going to want to show their clients that they have some exposure to gold and silver, right? Better late than never. Of course, it's not late, but it's late in the quarter. So I think they're going to, window dress their portfolios. They're going to add some gold exposure if they don't already have it. So you're going to see, I think, money coming in to gold and silver and the mining stocks over the next couple of days. By the way, that was the other knock on the bull market, that it wasn't being confirmed by the mining stocks. They were lagging. They were underperforming because in every gold bull market, the gold stocks lead the metal. Well, that wasn't happening until now. The GDX was up 18% so far this month. 18%. The GDXJ up 20%. Year to date, the GDX is up 120%. More than a double, 120. The GDXJ is up 125%. So the gold stocks are more than double, in fact, triple the return on gold. So not only are they leading, they're way out in front. So we are firing on all cylinders. We have silver outperforming gold, and we have the miners outperforming the metal, right? It's all systems go. And we're just launching off now, right? And I think when silver breaks above 50, which it could easily do next week, I mean, this may be the last week that you could buy silver below 50. Because I think once we break through 50, we ain't looking back, right? 50 is going to be support if we even test it. And we're going to go a lot higher than 50. But, we hit 46 and a half. So we just broke 40 just a few weeks ago. We got above 40 for the first time. And if you remember, what did I say? I said, once we break 40, we will make a beeline for 50. I said, we will get to 50 very quickly, right? And we are. 40 to 50 is happening a lot quicker than 30 to 40. That took a long time to get from 30 to 40. I mean, many, many months. And it just took a few weeks to get from, so far we haven't hit 50 yet. But I think we could easily do it next week. And by the way, look at the other precious metals. I mean, palladium, not too shabby, up 44% on the year. Look at platinum. Platinum was up 3.3% today, 12% on the week. That's the entire stock market S&P return for the year. Platinum did it in 1 week. Platinum's up 74% on the year. Now, we don't sell a lot of platinum at Schiff Gold. That's unfortunate. But, I was pounding the table because I wasn't really a big fan of platinum until earlier in the year when I saw how cheap it was. And on my main podcast, when gold was above 3,000 and platinum was still below 1,000, I was like, you got to buy platinum. You got to go to Schiff Gold. You got to buy some platinum because this is ridiculous. And yeah, look at how much it's up. It's still cheap. It's not as dirt cheap as it was, but I still think you're going to see some outperformance in platinum because it has a lot of catching up to do. And the same with silver. That's why I've been recommending so much silver, because it has a lot of catching up to do. And I think it's going to catch up because what's been driving the gold trade is central bankers. They don't buy silver. They don't even buy platinum. They buy gold because the central bankers were ahead of the curve, right? They could read the writing on the wall because they were writing what was on the wall.
Peter Schiff starts with urgency. Don't wait for Monday. Buy gold and silver over the weekend when you still can. Last week, gold jumped $40 and silver spiked $1 overnight. And those who bought early locked in incredible prices before the move. Schiff has been pounding the table on silver all year, saying it was one of the cheapest assets in the market. That call is paying off. Silver just closed above $46, up over 8% in a single week and nearly 60% year-to-date. What makes this moment different, Schiff argues, is that silver is now leading gold. Historically, that's been the confirmation signal for every major gold bull market. Gold was up only 0.5% on the day, while silver surged 2%, showing strength. Schiff says this leadership is a green light, and that we could see 50 silver dollars as soon as next week. Once silver breaks $50, he believes that level becomes new support, and the market will likely never look back. Even more telling is that Wall Street is finally waking up. For the first time in Schiff's decades-long career, major institutions like Morgan Stanley are openly recommending that investors allocate up to 20% of their portfolios to gold. Schiff believes this is just the beginning of a multi-year flood of money out of bonds and into precious metals and mining stocks. He highlights that miners, which lagged early in the rally, are now outperforming. GDX is up 120% year-to-date, and GDXJ is up 125%, triple the return of gold itself. That's exactly what a fully confirmed metals bull market looks like. Schiff ties it all to macroeconomics. Inflation is not going back to 2%, and the U.S. government's strategy of running massive deficits guarantees continued dollar devaluation. He warns that Fed policy, Treasury spending, and political pressure will keep real interest rates negative, which historically has been rocket fuel for gold and silver. He also reminds investors that dips are gifts. A $50 drop in gold at $3,800 is just 1.3%, barely a blip, and waiting for a perfect entry could mean missing the move entirely. In his view, we are still early in this cycle. This isn't the end of a rally, this is the beginning of a generational shift. Schiff argues that once silver breaks $50, the next leg higher could be violent, and those waiting for a pullback may get left behind.
But now Wall Street is finally waking up to the reality of inflation. 2% inflation is a thing of the past. We're not going back down to 2. In fact, we're not even going to stay at 3. We're going to have high inflation as far as the eye can see. All the government can do is lie about it and hope we don't notice. But Wall Street is finally waking up and noticing this. And this is not the end of something. This is the beginning of something. So don't wait until Monday for another big gap up, right? And we had a little bit of selling at the end of the day. So the prices look pretty good, right, compared to where they were midday. So when you're finished watching this, go to Schiff Gold and buy your gold and silver. I mean, I assume that most of the people who are watching these updates already own some. But you need to buy more. Because again, and I feel bad about this, because all year our customers have been on the fence, afraid to buy. Now that's picked up a little bit this month. Finally, some people are getting off the fence because people are stopping to worry. They were conditioned to expect gold to go down. And I don't want to buy the high. I'm going to wait for a pullback. There's too many people now that want to buy. You got all of Wall Street now that's going to be lining up. It's not just the gold bugs. It's not just Peter Schiff and a bunch of kooks that are buying. It's mainstream Wall Street firms that want a piece of our action, right? And this is a small pond, and these are big fish that are trying to jump in here, right? So we're going to see big moves up in gold and silver, and even bigger moves up in the gold and silver mining stocks. So again, if you don't own the miners, you should be buying them. You should go over to Europe Pacific Asset Management and check out my gold fund and my gold strategies. We have separately managed accounts in gold stocks. Remember, I put out that special report. You can download it at Europac.com. The best way to buy gold is still gold that hasn't been mined yet. These gold mining stocks are making a fortune, and they're going to make an even bigger fortune as the price of gold and silver continue to go up, right? They're not going to stop. And it's not just because gold and silver are going up. It's because the value of the dollar and other fiat currencies is going down, because it can only go down. Before, the Fed was engineering a 2% decline per year, or at least they were aiming for that. Now the dollar is going to lose a lot more than 2% per year, because the alternative, as far as the Fed is concerned, is worse. And certainly as far as the Trump administration, the last thing they want is air to come out of this bubble. So they need to blow as much air as possible, which means create as much inflation as possible. In fact, that's how you can sum up Donald Trump's economic plan. It's create massive inflation. That's it, right? Create an illusion. Get the stock market to go up, right? Allow people to buy overpriced real estate. We just need to flood the economy with inflation, right? Cheap credit, cheap money, gun the printing presses, and then point to the stock market and claim that we have a booming economy. Well, the smart money knows that the stock market isn't telling the real truth. In fact, in terms of gold, the stock market continues to go down. We're in a 25-year bear market. The S&P, the Dow, 70% decline priced in gold. Year to date, gold is up 43%. What's the S&P up? 13%, 14%? That means the S&P is down over 25% priced in real money, right? So people are operating under a delusion. They think they're getting rich, but they're actually getting poor. Well, if you don't want to get poor, right, you got to protect yourself. You got to buy physical gold and silver, and don't wait. Don't worry if the price goes down. And we had one day this week. One day we had like a $50 drop in the price of gold intra-week, and like a 35, 40-cent drop in silver. And I was right on X. I put out a post right on the lows and said, hey, here's your gift. Buy, right? Buy this dip. There's not going to be many. And it was erased the next day, right? So you got to act fast. But, you know, a $50 decline in the price of gold, it's not even worth waiting for. We're almost at $4,000, right? $3,800 gold. $50 is nothing. It's not like it used to be. Yeah, when gold was $1,000, if it dropped $50, okay, I could save 5%. Who cares if it drops $50 now? It's 1.25%. It's nothing. Don't worry about it. Just buy it, right? And the same thing with silver. Just buy it. Don't wait.
Here's the takeaway. Schiff believes we are days away from silver making a historic move above $50. And once that happens, sub-$50 silver may be gone for good. Wall Street is piling in, miners are outperforming, inflation isn't going away, and the dollar's purchasing power is shrinking fast. So, here's my question to you. Are you taking Schiff's warning seriously? Do you think silver clears $50 next week and keeps running? Or do you expect a pullback before the next leg higher? Drop your predictions in the comments. Let's see where this community stands on year-end silver and gold targets. And if you found this video helpful, hit that like button, make sure you're subscribed, and tap the notification bell so you never miss an update. Share this video with friends and family who still think inflation is temporary. This could be their wake-up call before the next big move.